Hey, what's happening, guys? Dan Barrow here with another Options and Play video update. So a lot of what we do trading option-wise is looking at events, right? So targeting earnings, bios, basically any event where a stock may be in play, we're usually looking at it with options. All right. So um, sometimes you get huge gaps. Sometimes the events don't live up to the hype and they don't move much at all, right? Marin, which I have up here, it wasn't an event. It wasn't something expected. Just ended up having a huge gap, and it made me think about something that I feel like I don't talk about as often, but I probably should, is this the idea of really like managing or initiating options after big gaps like this, okay? So if you're in options, right? So if you're in calls on, say, a stock like Marin that has a huge gap, it's great, right? I mean, not only is the stock move in your favor, but what you'll often see is just a significant expansion in implied volatility, right? Because the stock goes through a stretch where it does nothing, vol contracts, right? Premiums contract because the average trading range is contracting, right? But then when you go through a huge surge like you saw in the stock, that that volatility, that implied premium, it expands again, right? Because the average trading ranges expand, the volatility comes back into the stock, right? So not only is the stock moving in your favor, but also the implied premiums are going up because the average trading range is expanded too, right? So it's great if you're long, or it's great if you're long the options prior to the gap. If you're not long the options prior to the gap, or if you're long the options and you want to like roll up, right? Then that presents a different scenario, because what you really need to be mindful of is not necessarily that the stock could pull back, which obviously it could, right? Like a stock like Marin, extremely volatile, has a history of boom and bust, right? So yes, obviously the stock could move against you if you bought calls, but the problem is if it starts to tighten up. So after a day like today, you see this huge expansion in implied premiums, right? Implied volatility. But if you start to see that those average trading ranges contract again, even if the stock doesn't really pull back, you could see those premiums really start to move lower, right? Start to walk lower. So on days like this, when you have these huge gaps, more often than not, instead of going with straight calls, or if it was on the downside, straight puts, what I like to do is spreads. And the reason is because I can manage the premiums better, right? Because I am utilizing further out of the money options to offset the premiums on closer to the money options, right? So instead of just going with straight calls, which are through the roof today because of the gigantic move, I would prefer to go with spreads, because then I can get that overall debit down, right? I can get that premium down, and obviously, I mean, the contracts are still going to be expensive, but they're going to be less so. Like those strategies are going to be less so than just going with like your straight calls. Okay, so if you do get implied volatility contraction, it should work on both, right? So it's going to hit the closer to the money, but it's also going to hit the further out of the money options too. So from like a relative basis, it's probably not going to be as dramatic if you were just in your straight calls. Okay, so on days like this, if I'm initiating or rolling, probably going to want to go with spreads, because that's going to help me really control the premium better, right? And if you do get the contraction in implied volatility, or if you do get a small pullback from like a relative basis, the options probably aren't going to get hit as hard. Okay, I mean there's always exceptions to that, but I mean that's what I find, and that's why I like to look at spreads on after moves like this. Okay, Fed day today. We have had an interesting week, a lot of volatility. So let's see if it continues for the remainder of the week. All right. So if you like this video and you're looking for more information about trading options around events and what I mean by implied volatility, so just option basics, please follow up with the link in the description of the video for more information on options to play. Have a great night. Stay well, and we'll talk.